Jay, we've already had some big names report, but really earnings season kicks off with the big banks. And we've got three on deck Friday, JPMorgan Chase, Wells Fargo, and Morgan Stanley. And it's a lot to comprehend, but I don't think looking backward is going to help us looking forward. What are you looking for, say, from JPM when they report?
Yeah, and I mean, as per usual, financials tend to lead coming out. Of course, when the balance sheet is your business, you're going to have that well organized for earnings, right? So, and it's a great early indicator for the markets because it gives such a good read through to the broader economy. So usually the second or third Friday of April or July, October is when you get JP Morgan, Wells Fargo, Citigroup a lot of the times. Morgan Stanley is a new addition, but it should be interesting there because a couple of weeks ago we had gotten Jeffries crossing. Now they're not a bellwether by any stretch, but they do provide a little bit of a harbinger for what things are to come for banks. And they had a pretty poor quarter. And they are purely an investment banking site. So, from the IB unit, which both JP Morgan has a significant one, and of course, Morgan Stanley's primarily an IB unit, we are expecting some weaker numbers coming across from there. So, the market's just kind of bracing for some of that data to come across. One area that Jeffries really underperformed was in the fixed income area, and that's a significant part of JP Morgan's business. And they were talking about seeing some strength in there back in at the Bank of America Financial Services Conference at the beginning of March. So we kind of want to see how that's progressing moving forward on the IB side. Another
Let's
thing that
talk,
we
but wait. Let's talk
sure.
about consumer banking. I mean, for JP Morgan, I think last year, or at least this year, it's projected to be 42% of total revenue. And I think total revenue this year, depending on which FactSet or whoever you're looking at, is going to be around 176, 178 billion. So if 42% is consumer banking, but we're heading into this uncharted territory because of tariffs, what does that do to a bank like JPM?
Well, I mean, so one of the things that we've seen coming out is the steepening of the yield curve along the bonds. There's been a lot of demand for short-term bonds, a lot of concern around longer-term bonds because of the inflation and the uncertainty around tariffs, right? So you are seeing a steepening of the curve there, which should benefit banks. You know, that they borrow at short-term rates, they lend out at long-term rates. So one of the first things that you want to keep an eye out on there is the net interest income, right? And that JP Morgan had guided for that of about 94 billion for 2025. So we want to keep an eye out on that front there just to see if they adjust that lower or anything. And that could suggest that they haven't really been able to take advantage of some of these higher rates. And we're going to be seeing that playing out in the community banking areas for each of these banks. So for JP Morgan, their community bank sector, that includes their auto loans, credit card loans, and mortgage loans, of course. Mortgage originations as well too. That'll be an area of interest. So you'll want to be following those closely just to get an idea of what's going on there. Auto lending certainly been weaker the last couple of quarters. Not a lot of demand. I'll be curious to see if with these tariffs, if anecdotally speaking, we've seen more demand for cars, so that could come up there.
Do you
Credit
think
cards, we're expecting to see a cutback as we saw with the consumer credit numbers yesterday.
But do you think that setting up for the second quarter, that the consumer being weak could be a problem? I mean, if people aren't feeling comfortable to take out a mortgage loan, if people aren't feeling comfortable to buy a car and finance that, that's going to show up on the consumer banking side of their report, isn't it? I mean, not this
Yeah,
time, but next time.
yeah. I mean, so the question will be, what do they have to say about loan demand, right? And the linearity of it. We were talking very similarly about Delta with that. Has that declined throughout the quarter?
And loan
Are they,
loss reserves, how much are they setting aside for anticipated defaults?
Well, that's certainly going to be a big aspect of it. I mean, that's not so much loan demand, though, as much as the delinquency rate. So the net charge-offs, you want to be watching that. Credit costs, which is where the reserve requirements show up. Now, there's a lot of anticipation that the reserve build will be pretty high this quarter. Now, I haven't seen the numbers for it, but that's going to be a figure that people are watching closely. And of course, you get the builds in good times, and then you get the reductions when things are good. So most people are expecting to see, especially for JP Morgan, that fortress balance sheet that Jamie
Yeah.
Dimon always touts, for that to be on the rise. So that's certainly going to be one element that you're going to get. Now, in the past, obviously, we just had the Jamie Dimon shareholder letter.
Yeah, and he's
And
warning about potential slowdown, the effects of the tariffs. He hasn't said it's definitely going to happen, but he's putting his team on alert.
he's put the team on the alert. But if you recall, about 2 years ago, he was talking about an economic hurricane coming down the road, right?
Hmm.
And we didn't see that in the reserve moves. There was actually reductions in the reserves when he was talking about the economic hurricane. So he doesn't know he's a banker. He doesn't always talk his book exactly, So what he said was certainly cautionary, and that's what's going to make the reserve builds all that more interesting. Does he back that up by putting more into the bank and putting more onto the balance sheet for a rainy day? And
Okay.
again, the NCOs is another aspect that you want to be keeping an eye out on. They were 1.63% of all loans last quarter.
Hmm.
You want to see if there's a big uptick in the net charge-offs.
So real quick, because we only have about a minute, 2 minutes left. Let's talk about Wells Fargo. I mean,
Yeah,
they're the bank that deservedly got beaten up after, what is it, 3 billion they paid for defrauding customers, opening up the
right.
accounts. Bissett, the Secretary of Treasury, back in October, before he got the office, talked about the need to release them from federal oversight that still exists. What do you think about that? You think that they could get a boost from that, or some kind of hint that that's coming?
Yeah, well, I mean, that's been one of the primary investment theses behind Wells Fargo over the last couple of months. Now, it did have a nice run up to about the 78 area there before pulling back down below 70. And a lot of that, of course, has to do with the economic concerns that are going on in the country right now. But I don't expect to see an announcement like that coming forward from an earnings call. I think that is something that's obviously going to emanate from either the Fed, the FDIC, or the CSFB. It's not going to come from a Wells Fargo earnings call. So I don't think you're going to get that boost. They're probably going to be asked about it on the call. Now, a couple of weeks ago, they did make an announcement that they had passed some of the barriers that they needed to in order to get recompliance, in order to expand the balance sheet. Because the big thing with those ties that the government put on Wells Fargo was they capped how much that they could lend. So, if that is removed, then obviously they could come in and start demanding more of the business. Now, they are primarily a traditional bank. They do have a small investment banking unit, but it's nowhere near on par with JP Morgan. So they're going to be probably more of the pure read on the health of the economy as compared to a JP Morgan and certainly a Morgan Stanley.
Yeah, when you talk about that, I think the expectations for revenue, at least at JP Morgan, is something like 43.9 billion. At Wells Fargo, the expectation is something like 20.76 billion. But Morgan Stanley, let's talk about good old-fashioned investment banks. Although, I mean, they had back during the great financial collapse, they had to become a quote traditional bank. What's the headline you're expecting? We got to wrap up in 30 seconds, but what do you
Yeah,
expect?
I mean, I'm expecting a poor quarter from them. We'll be keeping a close eye on it, but the Jeffries news certainly cast a pall over the investment banking area. Just anecdotally speaking, I was talking with a friend of mine who's a recruiter for private equity, and he was just noting that hiring's way down because there's no demands for IPOs. You saw a number of IPOs like Klarna uh, decide to pull back off. So that was expected to be a big growth engine for them. The fees that they had been charging, JP Morgan said that they're expecting about a 17% year over year boost from fees going in. But if we're seeing less IPOs, less M&A activity around all the uncertainty on the new administration, then that's going to be reflected in Q1. Now, what will be important will be, do they say anything about that on the pipeline? And that's going to be something that we're going to be paying close attention to when Morgan Stanley has their call. The other thing that you're going to want to watch there is the VAR, which is the value at risk, which is a key metric for a read through on risk appetite. So Keep an eye out on that number. That's probably going to move up high, move down lower as people reduce their risk in this highly volatile market. So they're two of the things that you're going to want to watch for Morgan Stanley moving forward to help really get a feel of what's going on in the broader market here.
All right, man. Well, Friday morning, we're on deck. Catch you later, Jake.
All right, talk to you later, Adam.